What is going on, everybody? Welcome back to another video. In today's video, we are going to go over QQQY and JEPY. You guys see them? These are very popular ETFs now, and I want to go over my honest opinion and are these dividend traps? So with that being said, let's go ahead, cue the intro, and get right into this video.
I know I'm fine, but the money makes
Okay guys, you guys see all these ETFs now that are all options based and just a bunch of, showing you monthly income. And I'm the first one to admit I absolutely love my monthly income. Like, they're my favorite stocks that I hold. But my biggest thing here is are they safe, and are they going to just depreciate like a couple of the other videos I've done on other stocks? And so I want to show you the strategy that QQQY and JEPY are using and let you kind of figure out, how would this work, and could you make money doing this, and what are the probabilities of being successful long term? So with that being said, we want to jump right into this one, and I want to explain one thing that is way different. So JEPY sells basically 0 day till 0 DTE, or 0 days till expiration options. Now, what does that mean? It basically means if today's Monday, the market opens today, they're going to go and sell a put option out of the money. Now, that is a key part that I do like. They are selling an out of the money option and collecting that premium and then doing nothing. That's basically what it is. Now, you have to manage that when it gets called to you and things like that. If you are new to trading options, I'm going to explain. They use actually SPX options, so they don't settle like regular options. So if you were going to go trade SPY, QQQ, any of the ETFs that track the indexes, they settle differently. So there's a thing called American versus European options here. And a lot of the times you will see we do American options, meaning I can call my option if I get put to it, and then I can have those shares. European is cash settled. Guys, you can't expire them, or you cannot get them early. You just have to wait until everything settles on the expiration date. So that's always a big thing here. But let's go back to JEPY. And again, these are SPX options that they are trading these 0 DTEs on. The one thing I always like to go into and look at these is their holdings. So they are holding basically just SPX options, guys. That's what's nice when you look at these holdings and you're seeing it. They do hold bonds. Now, again, they hold bonds so that they can leverage the bonds and get a little bit of a rate return as well on the cash that they're not using for it, which I don't have a problem with whatsoever. But here's what I have a problem with. First off, again, we're going down the same. You guys have recommended this one to me to do. The chart's awful, guys. The chart is absolutely awful. I mean, it goes up and then just shatters right back down. I'm not owning stocks that do this. Now, the bright side, their dividend is pretty good. And, well, the only problem is with the dividend, of course, it's going down as well. So you got your first initial dividend 90, 91, instantly 65, and then now we're down to 50. Where do we think the next one's going to go? I'm not saying that the next one may not be 55 cents, but you're not nowhere near that dollar range again on these monthly dividends. That's just my opinion. I don't see it happening. Maybe a one-off, but the chart looks awful. It's a no-go for me on the chart, so that's fail number one, strike one. The dividend keeps getting cut down. I get it. It's premium based, not based off of a regular company sharing their earnings, so I get that, but it is a company to me because they're trying to trade with my funds. So that's strike two to me. So what's the next step here? Well, they're SPX options. I can do that myself, and they're going to charge a management fee. I don't remember what, I think it was like 0.99 is what it was. So basically 1%, if I remember correctly. Somebody correct me down in the comments if I'm wrong on these funds. It was like 0.99%, so it's 1% a year basically. That's strike three for me. I mean, I don't really care about that last one as much, but I'm not looking to own something that is just depreciating, because now here is a plus. They do have options. Now, I don't know how tradable they are. That is always something that's, it can show options but does not mean they actually have options that are like really tradable here. Yeah, you can see 5 cents on a call, and that's a week out. So, maybe, yeah, they have monthly options, is what they have. So you're looking at maybe selling a put. Maybe that's maybe the better idea for some of you that are looking at this. But it's 1802. You're 2 cents away from being called away. Now, the other big key here that I want to look at, and this is something that I don't think enough people really look at here, is we're just going to go to SPY, because again, SPX is what it is. Or we'll just go to SPX. How about that? We'll just go to the index. How do you expect to make money on 0 DTE options long term when the market it's unforgiving? Like, when it has red days, it has red days. So really, the strike three for me in not putting this in my portfolio is going to be the strategy. I love selling options. You guys know that. It's a big part of my income. But I never sell 0 day TE options. I'm selling 45 days out. I'm collecting enough premium to make it worth it, and then I structure it. I'll do a 45-day DTE this week, and then I'll do a 45 DTE next week, and then I'll do a 45 DTE the following week, and then another 45 DTE the next following week. And that basically gives me monthly income, unless one just shoots off, and I get to collect the premium even faster. It's a win-win situation for me, guys. And I think that's what you need to be putting yourself in good companies. I like the S&P 500, guys. I think this is a great idea if it's not on 0 DTE options. Everybody wants a quick buck. A quick buck goes to something like this. A quick dollar, every time you make a quick dollar, just know in the stock market, it usually looks like this, and you're getting killed. I would rather you go use leverage funds such as TQQQQ and trade off those selling options than using these and buying JEPY. I think you're going to get a better return over the long term, especially if you're using options to sell and you have a higher probability. I think it's just a better overall win-win situation for you than a stock that, I'm not going to lie to you, I don't believe in it. Same with QQQY. Guys, did you guys see that? I loaded a new chart up, and it dang near didn't change. That's not really a good thing to show that these funds really aren't putting it all together. So with that being said, guys, thank you guys all for watching this video. I really hope this helps somebody out. Know what you are looking for in every single investment you make, and you will go a lot further than just trying to make a quick dollar.